everyone, and I hope that you are well. Welcome back to the channel, of course. I just want to obviously apologize. I know it's been a very long time. A lot of you have been asking for videos. To be honest, it's been quite hard thinking of content which is effective and useful for you guys. I don't want to just bang out videos just for the sake of increasing our YouTube presence, because that's not really it's not really something I'm too concerned about. But we were busy over January because we were doing a focus program within the mentorship, so our focus was there. But I thought of a good video that we can do, and it's something that has come up quite a lot, especially with those following the free content. And also, I just want to say thank you to everyone who's shown the support, and thank you for letting us know how you're getting on using the free content. Because as I always say, the free content should be enough to make you consistent. Obviously, it makes sense for us to hold back the rules because that's within our mentorship, and I don't think that anyone else does a rule-based system before Vertex in smart money concepts. So I'm not saying I created it, but it's pretty much our domain, and it's something that I want to keep within the mentorship, and it's only fair for our students to obviously pay for that. Apart from that, everything else, obviously, I want to try and highlight things that we can. I want to try highlight things that will improve your trading for the better. Now, the last video we did, I think, was the blueprint video. Now, that video should give you a clear mechanical entry system. However, sometimes what we have is price would cause an impulsive move and it wouldn't retrace the POI, and then you sort of get frustrated and you don't know what to do, right? So what I mean is when price is doing this, when price goes, so you have your range, you have your impulsive move, right? And then you go on to mark out, not this, there we go. You go on to mark out your POI, right? Price then does this, and you're going to be waiting for your POI to be hit, then price flies away. And you're thinking, where did it react from? Because it doesn't make sense. Now, this happens a lot. Now, the thing is, something that we talk about a lot is time frame awareness. Now, it's not always easy to be aware of what's happening in multi time frames, because to be honest, you can't monitor them all in one go. Obviously, you can have several charts in one go in one screen if you want, but sometimes even then, it's still very hard to follow. However, if you miss a POI, for example, does that mean that you've missed a trade? It doesn't, because you can simply follow the reaction because you already know where the intention is. So before you start getting emotional about it, just study the reaction and see if it makes sense to you. So hopefully this video will help you develop that narrative before you go on jumping and looking to trade your next trade, basically. So why does this happen? Now, effectively, as we know, obviously price doesn't move as smoothly as this. Within this, we have several candles. Price is reacting off something most of the time. It's either clearing imbalance or reacting to some sort of OB. Now, how some sort of OB on a different time frame? Okay, say that for example you picked the 4 hour and it's reacting to the 2 hour time frame, or the 8 hour time frame. How would we know? How would we be able to keep our eyes on every single time frame and still be efficient? Because thing is, I don't look at several time frames because for me that's not effective, and I like to keep an effective way of working, right? So what this video will hopefully highlight is what is going to highlight three things that we can look for in terms of where price can be reacting from and is it justified. Now, when you're looking for a trade, you should be asking a few things. So the first thing you should be asking before this happens, you need to ask yourself, the first question you need to ask yourself is what? So you need to ask yourself what is happening at this point. At this point, what we can see, we've got a bullish move, broken structure, simple as that. Okay. Now you need to think of what you're going to do next. Now your objective, right, is to trade your trading range from here to here. That's your trading range. And because you've got this bullish intention, you want to trade from anywhere below that 50% mark and continue high, right? Where do you want to go, okay, and why? So the next thing you need to ask is where your target is going to be. Now your target would be obviously your structural high. Now that can either be potentially playing a continuation, or it can potentially be a liquidity grab and price can just continue crashing down the opposite direction. But that is always your first target, right? Because you are trading from range to range, and this is regardless of the time frame. And everything that I'm going to show you is can be easily replicated. Sorry, it can be easily replicated on any time frame that you decide to follow. And I know I just said replicated wrong again. Actually, I said it correctly then. Um, anyway, so the first thing you need to ask yourself is what is happening, okay? And then you need to ask yourself, say for example, before I start drawing, because I know I do draw a lot. There we go. Then you need to ask yourself, for example, say that price comes here and then you start getting a reaction. And you're thinking, why is it reacting? What's going to happen? This is when you need to justify if this reaction makes sense and if it's still valid enough for you to follow this reaction on that lower time frame to continue the move higher. So you need to ask yourself why. Okay. And then also in that question, your why would be where are you going? Okay. And why should it get there? The reason why it should get there is because we create that impulse is reacting of something that that makes sense in terms of mitigation play, and then our lower time frame move will give us that that direction. The next question that you have is how. Now this is answered. This is basically how are you going to do that? Now this is what the blueprint video should give you. So this is what I'm just going to write blueprint to give you a reference point. Okay. So this is where the blueprint entry video should give you, and that's essentially what you're going to follow. So what do you do when price is not coming back to your POI that you've perfectly marked? So let's talk about some examples. So where was this one? This one was somewhere here. So let's go to the first one on the hourly. Okay, so now, obviously, everything I'm showing you is hindsight. I wasn't even trading at this point. So, yeah, everything obviously I've already seen, but it's to give you a clear textbook idea of what you to look for, and then you can replicate it yourself on your own time. So, what we have here is we have our first range. So, we have a range being created from this low, okay, to this high. All right. Now, we have the breaker structure. Now, if you from this low, we have our high, which is here. So we have that breaker structure. I'm not sure if you can see that. Let me make that black. There you go. You should be able to see that. So we have that breaker structure, and now we have our question of what is happening. We have the breaker structure, and now we have bullish intention. So what we will do is generally what we have is look for the OB, which is generally I've said generally a lot. At the extreme of the range, we mark out the OB. Okay. But what's actually happened? Price has not come back to react to that POI. So does this mean that we missed a move? Does this mean we've done something wrong? However, what we've missed is this. Now, I don't generally use these candles because for me, I like to use the absolute extreme of the range, and I like to have an OB that has imbalance, and there's plenty of imbalance sitting just here, right? Now, for me, I would have marked this candle as a POI, so I would have missed this. However, if you see this, if you go on and you're suddenly seeing that price is at this point, for example, let's move back one more candle. Okay, see that price is doing this. Okay, let me mark this up, get rid of that. Now, you need to ask yourself, why is it doing this? Does this still make sense? Because as we know, price is fractal, so this can just be a lower time frame move, and potentially we can play this lower time frame continuation, right? And this is just during London, as we can see coming into this point. Not London, sorry, New York. Apologies. So to make this trade make sense, we need to make sure that this high time frame play. Now, this as I'm saying, in terms of high time frame, your high time frame can be the minute time frame, for example. Especially for our scalps, the minute time frame is a high time frame. It can be, you can use this on any time frame combo that you decide to use. What we have is this. So the first thing you'll see is this is reacting to this candle. Now, you need to ask yourself, does it make sense? Does a reaction make sense to continue to continue to move to this high? Now, from this time frame alone, for me, it doesn't make any sense. However, what we need to understand is what is happening in this candle and what actually creates an OB. So an OB is effectively created by sideways range, which is effectively when price goes in to break the high and the low. So we don't actually have a sense of direction. Price is moving within a range, and then we have an impulsive move. And then effectively price comes back to mitigate that and then continued the move that it was going to do anyway. All right, the intention was given from that impulsive move out of that range. When you have a candle like this one, which is struggling to break the candle high and low of the previous candle, so what's effectively happening is we have this candle here, and the next candle, sorry, is struggling to break the high and low, including the wicks. I've just not drawn them. What does this mean? Inside this candle, right? I did not mean to use that, sorry. Inside this candle, this is effectively what's called an inside bar, and this is what's happening in this candle. So we are entering, actually I'll draw it from this way. So we're entering, for example, say that price is moving here, we're entering a range, right? And then we have the impulsive move. So this is what's happening in there. So now we can say, does this make sense? Of course, on this time frame, it doesn't for us because it's not the extreme of the range. But what we know is on a lower time frame, this would make sense in terms of what created this range, because this is what's happening, because that inside bar indicates a range before that impulsive move. So this gives us a valid POI. However, for us, it doesn't really meet our rule-based scenario. So what we do is, and something that I like to talk about, is creating an excuse for your trade. So which I don't like to say forcing, but you're sort of creating that situation and sort of pushing that situation in your favor, right? So if we go to, for example, the 5 minute, and if we see what's happening here, what we have is this pullback, and then we have that range forming here, and then we have the breaker structure. I'm not going to the minute time frame because this was back in December, and price would it would just say there's not enough data, which doesn't make sense for TradingView. You pay so much for it, it should give you that data, but obviously it doesn't. But this is a lower time frame range before that impulsive move, and now what we have is we have this range being created from here to here. So this move makes sense with the unmitigated OB, and we have that imbalance as well. So this reaction point makes complete sense. Now, without even going to that lower time frame, without even going to the 5 minute, we were able to justify this reaction without even going down here. Because, for example, if this reaction was taking place in live, I would not have the time to look back and then trade the reaction at the same time. So if I know that this is what's happening on a lower time frame, and obviously this is something you need to backtest to gain the trust of it, because if you don't trust it and you're obviously going off my word for it, then obviously fair play, but you need to be able to trust the process enough so you're comfortable pulling the trigger in this scenario. So effectively, if I see a reaction from here, I can say this is a valid reaction, it makes sense, there's a low time frame range, and there's an impulsive move within that. So there's definitely an OB there, okay? That's the first way that I would say it, and then I could trade that reaction, and that's what you'll do following the blueprint video in terms of your entries, and you can follow to enter that to take out that high. So that's the first tip. Essentially, if you find an inside bar, just understand that that is a lower time frame range. And again, your higher time frame your base time frame can be the 5 minute, 1 minute, 1 hour, 4 hour, daily, whatever you wish to follow. It's completely up to you. But as long as you understand that this candle, an inside bar, is effectively a lower time frame range, if you have that impulsive move with imbalance and you have this reaction, it makes sense. So although price didn't come back to the extreme, it's still below that 50% mark. So it's still in a valid trading range, right? And it's still in a valid point to buy from. It makes sense. So although price didn't come back to the POI, should we be worried? No. If we see a reaction and we can make sense of it, we can form an excuse to go long to continue that move. That's effectively, sorry, I didn't mean to do that. That's effectively what's happened here, right? As you can see, he ended up reaching the high, and there was a lower time frame entry there on backtest, but I'll allow you guys to do that. Now, the next thing that we have Let me get rid of all these. The next thing we need to understand is what is happening inside wicks. So let's focus on this price action here. So what we have is a breaker structure from here. Okay, and then we've created a range from here to here. Okay, so effectively we already got our what is happening. We've got a bullish move, bullish intent, and now we need to find our POI. Now the first thing that we'll look for is our OB. Our OB is obviously that candle there. However, we cannot ignore the size of this wick, and this is what we need to understand: is what's happening on this wick on the lower time frame, and does it make sense? So when you get a candle like this, how the wick is created, right? So let me draw this, and let me draw the huge wick from here. Gosh, there we go. How this is created: when the candle's opening, price is moving like this, and then it rapidly closes. Now, a confluence that we have is something called momentum. Now, when momentum is shifting in your favor, in terms of is shifting in, well, not in your favor. If momentum is shifting in a certain direction, that's an added confluence to your bias that you're creating, right? When you have a wick which is bigger than the candle body, now the body represents the volume of that candle in terms of whether it's a bullish or bearish candle. When price opens, price is opening from here, and it goes on to create the low, then it goes on to create the high, wherever that wick is, then it closes. That's the basic understanding. However, when you have a huge wick, this is telling you where momentum is lying. But when you're from here, right, when you're looking for an OB, you're looking for the last point of selling pressure. Now, you need to ask yourself, where were the sellers in the market? Now, this wick indicates that there were sellers here and then the buyers took over. Okay, so the buyers first were introduced into the market here, and the sellers were last in position here. Now, in terms of institutional mitigation, essentially that's what we're trading. We're trading that footprint. They're looking out to take out their sells before they continue the higher move. So without even going to a lower time frame, we know that this is a valid POI itself to continue the move up. Now, if we were to just go back, and again, I'm going to have to go to the 5 minute because TradingView does not give you that data that far back. What we can see is this is inside that wick, right? What we have is a bearish move down and a rapid bullish move, and what that leaves is this. It leaves this clear OB within here. Now, I'm not sure if price actually reacted from here. I think it was that one. Let me just drag this out. And then we have it. Price reacts from there and then continues. And as we know, it goes on to reach the high. However, that justification was completely done off the 4 hour without even going to a lower time frame. Because sometimes, especially if you're new, the lower time frames are quite difficult to read, and it can be a little bit daunting. However, we're able to read the lower time frame without even having to go to that point. But this comes on to the point about being efficient, because if you, for example, you have this reaction and you're sort of thinking, does it make sense? You can already justify this without even going lower, because this wick makes sense and you know what's happening within that. Alternatively, what you can do is either use the open or the base of this wick. That's just a quicker way of refining it from there. But that's just a quick way of determining what's actually happening in price without even going to a lower time frame. Because as I said, sometimes in a live environment, if you're following a lower time frame reaction from here, I mean, what this is a London move somewhere around here, right? We have a London bullish move, right? If, for example, you're trading the London session and you don't know if this move makes sense, you can quickly flick to that 4 hour and then see if that reaction makes sense, because it does. Say, for example, the 4 hours, the first thing you see, and you see this whole bullish impulse, and you're thinking, is this valid to get in? You already know you've got that intention, and you already know what you're looking for. You're looking for an excuse to go long, but you just need to be able to justify it and whether it fits your rules or not. This fits our rules in terms of if this reaction is valid, it reacting to a valid POI for us, and we know that we can continue that higher. So that's tip number 2. Now, the last one that we want to talk about is this one is a little bit of a strange one, actually. Where was it? It was somewhere. It was in January. Uh, this one's probably not the best example to be honest, but it's the only one that I can find that was clear. Now, sometimes what we have is this. Now, for example, what we have is this high. Okay, we go on to break structure from the last low from here. Now, some people will use this. For us, that's not our structural low. Our structural low is this one. There we go. So we have this range that's created this low, right? Now, obviously, the first thing that we'll do is this. So we're going to find our extreme. That's already been mitigated. It's not clear. We've got clear imbalances, so we mark out this POI. However, what we see is that price is underreacting from here, and we're thinking, oh, what's going on? You know, it doesn't make sense. Price is obviously this is still that below that 50% mark, so it doesn't really make sense. However, can we force this situation to make sense for us in terms of finding that trade? Now, again, forcing is not the best word to use, but it's sort of giving the idea that we can create scenarios as long as it fits our rules. Because with our rule set that we teach within Vertex, you're able to trade pretty much from anywhere as long as your rules, uh, as long as your criteria are met, right? Now, a quick thing that we can see is, for example, see we see this reaction, right, and we see this break, we see this break of structure. We need to think, does it make sense? We look at what is it reacting off. At this point, it doesn't look like it's reacting off anything. I think some people would use that candle as an OB. For me, it's not. I would rather use anything off the extreme. Now, the interesting part is this: when you have wicks like this, what's effectively is happening is that price is coming down, then it's pulling back, and then it's creating this breaker structure. Now, within this move, not breaker structure, it's creating this move down. Now, within this move, we know that there's a pullback because we've got selling, then buying, then selling, right? Pure selling. And this, we have this point of imbalance which needs to be cleared, corrected. Now, if we were to go to a lower time frame, for example, we can see exactly what is going on and we can see if this makes sense. Again, I go to the five minute. Don't be fixated on the time frames. The reason I'm using the 5 minute just so the data doesn't pull out. But what we can see is this is what's happening in that wick. We have that move down, pull back, and we have this push down, okay? And what we can see here is a very clear OB here. And I don't know if that's where price reacted from, and it did. And then we can say, oh, this reaction makes sense in the end, and we could look for a trade, even off the 5 minute. I mean, we have the low, we have the high, we have the low breaker structure, and then we have the next range from here to here. No trade really within that. I mean, the last POI was in here. Again, what we see is a huge wick in terms of what's actually happening in this wick, because there's no clear POI. Obviously, you have this OB, valid reaction, we have mitigation, and then we have this mitigation to continue. So we have order flow to continue that move down. Obviously, that was a very rough explanation there, but the blueprint video should cover that for you. I don't want to extend this video any longer. I know I've spoken a lot, and sometimes you sort of lose that focus. So I think keeping a video nice and short, which is easier to digest, really. So the 3 tips essentially is, if I go back to the hourly on this one, is just pay attention to the fact of where price is reacting from and see if you can justify it. Because say, for example, if you're trading a specific session, say if you're trading London and New York only, or New York and Asia only, it's fine. And say you're only focusing on that lower time frame, but you still want to follow that higher time frame move, because if you're trading the lower time frame only, counter trend is very difficult because essentially you're guessing the high and low. If you're following pro trend, you want to understand the reaction that's taking place. In this situation, say I woke up at this point, and then this, to be fair, this is during London, and say you see a London bearish move, you want to see, does it make sense on the high time frame to essentially give you that bigger time frame swing, because sometimes you may have this, and that's essentially what's happened from there. So without even going to a lower time frame, I can justify this reaction without wasting that time of doing that. And again, this comes with trust. You need to be able to trust that process, and this comes with backtesting, understanding these sort of POIs, because although it's not a POI just from looking on the hourly, we can make this POI make sense to us, which would then make this reaction make sense to us, and then we can continue trading the continuation. But say, for example, as I said, if you're trading specific sessions, you can quickly just glance at the higher time frame and see if it's making sense to you to hold. If you're going either counter or pro trend. Obviously, in this situation, this is pro trend because we have this impulsive move down, which is giving us this bearish intent, and then we can obviously continue the move. We can say that this has potential for a further swing, and funnily enough, most of probably our biggest trades that myself and James have taken have come from our scalp model, which we teach within Vertex, but is from this understanding of the high time frame move that we've been able to trade specific sessions, take out our partials, make sure we pay ourselves, and then hold a remainder for a swing. And that's effectively what can happen here. I don't think I was trading at this point, or was I? I'm not sure, but I didn't even see this move. That's a very nice move, to be fair. But as I said, if you miss a POI, don't worry. As long as you can understand the reaction and make it make sense to you, you are able to trade any form of reaction as long as it follows the rules. All you need to do is follow the blueprint video for your entries and follow this video and the previous videos in terms of understanding your POIs. Now, as I said, I know it's been a while and I hope this video was worth waiting for. It probably sounds a little bit weird to say. But as I said, I will try to be more active on YouTube as soon as I get ideas. Because I mean, we can do trade breakdowns, but I find it very hard to pull back information. And I do trade breakdowns for obviously those people in the course program or the mentorship. Obviously, if you want to learn the exact rules, as I said, I need to obviously add a little bit of marketing here. That's the point of YouTube, I suppose. If you want to learn the exact rules, you can join the course program. You can cancel anytime. You can learn the rules and you can go off from there. You cancel it whenever. Alternatively, you can join on our mentorship where you can get direct access to us. You can speak to us directly, myself and James, for any concerns that you have. But for now, I'll leave you guys be. I hope you guys have enjoyed the video, and I will see you guys in the next one.